Well, another $31 billion was wiped off the Australian Stock Exchange today amid growing concern over Europe's debt crisis. The All Ordinaries Index has slipped below the 4,000 mark. The market was also discouraged by more evidence of a weakening manufacturing sector. Here's Simon Palin.
Australian investors had little to look forward to as the market opened today. Wall Street ended last week with heavy losses, and there was more bad news out of Europe overnight, with Greece expected to miss budget deficit targets set up just months ago.
At some stage, Greece will default, and that's basically what the Europeans are trying to do, is make it an orderly default, that it doesn't actually hinder or, if you like, cause a problem in the global banking system.
Frankly, right now, the Eurozone is a threat not just to itself, but also a threat to the British economy, but a threat to the worldwide economy, and so we have to deal with this.
And as fears continue to mount over global economic growth, there's increasing concern at the performance of Australia's manufacturing sector. The latest figures show further weakening in September.
The Australian manufacturing sector is probably close enough to be in recession. The readings you're getting out of the PMI today is around 43. Put that in scale. The index, when it goes below 50, is basically considered to be recessionary.
It's reinforcing calls for the Reserve Bank to offer some interest rate relief. But unfortunately for the manufacturing and retail sectors and the many other groups who'd like to see interest rates go down, economists are predicting no change. The cash rate is tipped to stay on hold at 4.75% when the Reserve Bank meets tomorrow.
And they still are a little bit worried about inflation, so I think the story will be RBA's on hold for ages.
Meanwhile, the latest inflation figures compiled by TD Securities and the Melbourne Institute paint a reasonably benign picture. Headline consumer prices rose just slightly in the month of September, but were down a touch on a year ago.